I know a lot of you want to invest in US stocks and ETFs, but are confused. Which apps to use, what are their charges, and how safe are these apps? Today, I'll break it all down with real money examples so you know exactly which option suits you. This has been the most awaited video on the channel. So without any delay, let's dive in. In this video, we'll discuss first, Indian apps that enable international investing, their charges and safety. Second, US broker apps, their charges and safety. Lastly, comparing Indian and US apps to decide which one suits your investing style. If you don't know me, I'm CA Vamika from the Wealth Palette, where we invest with clarity and confidence. First way to invest internationally is through Indian platforms like INDMoney, vested via Angel One, Groww, and Appreciate. These apps enable you to send money abroad from your Indian bank account and invest in international ETFs and stocks. Back in pay, these Indian platforms tie up with US custodians or brokers which maintain a foreign demat or sub account for each individual investor. I've personally tested INDmoney, but the flow on other Indian apps would be more or less the same. INDmoney is paperless because it is using Locker. That makes it fast and convenient to open a demat with it. It doesn't charge any opening, platform fee or withdrawal charges, but it has other charges. So let's understand these other charges with an example. Suppose you transfer 10,000 rupees to buy a US ETF directly from INDmoney. The app charges GST on conversion fees of minimum 45 rupees or 18% of the service cost, whichever is higher. Let's first deduct this GST amount of 45 rupees from the 10,000 invested amount. That leaves us with 9,955 rupees to invest. Converting this amount at the exchange rate of 90.04, which is offered by the app on that day, we would get $110.56 to invest. But the RBI exchange rate on that day is 88.66. This difference between the exchange rates is the bank spread. But there could be some element of the app's commission also between the current exchange rate and the app exchange rate. However, INDmoney has already stated that this is the best rate offered across banks. The next step is to add this money into your INDmoney app from your linked bank account. INDmoney supports transfers from ICICI, HDFC, Axis and Federal Bank savings account. And it is quite seamless to link your bank account with INDmoney if you already have an existing account with any of these banks. Remittance is charged by your bank to transfer money from your bank account to the investing app. Now, the remittance charges by the bank are 250 rupees plus 18% GST, which comes to 295 rupees. The best part about US investing is that you can even buy fractional shares. So even though one QQM ETF is worth $244, which is almost 22,000 rupees, you can even invest $10 and get fractional ownership of 0.04 shares of QQM. But when you buy or sell, INDmoney charges 0.25% as brokerage, which is capped at $25. Plus, there is 18% GST on the brokerage amount as well. The total charges comes to 373 rupees, which is 3.7% expense ratio on the invested amount of 9955. The relief for us as Indian investors is that these charges get netted against the rupee depreciation, which is 3 to 4% per year. It will be more cost effective to do lump sum investments of 50,000 and above. At 50,000, the cost for INDmoney would come down to 1%. At higher invested amounts, the cost percentage would come down further as remittance charges are fixed in nature. INDmoney offers investing in US stocks and ETFs, and it does not offer investing in other international markets. But you must be wondering if it's risky to invest through INDmoney and how are you safeguarded against the risks? Okay, so INDmoney invests via regulated US brokers such as Drive Wealth or Alpaca Securities. These brokerage firms are registered with the US SEC and FINRA, which are like US stock market ka SEBI. This ensures your US equity holdings are regulated by the standard US financial regulators, and that keeps us as investors safeguarded. In extreme scenarios, if the broking company becomes insolvent, then investments held via the US broking companies are protected by the Securities Investor Protection Corporation, short mein SIPC. SIPC insures each investor to the extent of $500,000, which is 4.4 crores. Because every individual investor has a sub account created with the brokerage, hence each customer is insured separately. Okay, that is a relief now. So, our takeaways from this section are: first, INDMoney onboarding is quite simple and seamless. Second, the charges are 3.7% at 10,000 rupees investment, and the charges are 1% at 50,000 rupees investment. Lastly, INDMoney is just the fintech platform enabling the US investment. Drive Wealth or Alpaca Securities are the ultimate custodians, which are regulated by SEC and FINRA and insured under SIPC. But wait till you hear the charges of interactive brokers. It is shocking. If you're finding this video useful, then do hit like and subscribe to the channel so that we can help more investors get clarity on this topic. Also, I'll be doing my first live webinar on US tech ETFs other than index ETFs on 18th October. This has been a highly requested topic on this channel. Please note this is a paid webinar, and if you've been watching my videos, then you know that my mission through this channel is to be authentic, reliable, and bring extremely well-researched data points to you. If you found value in my YouTube videos, then the webinar is going to be 10x more valuable. If you're interested, you can fill the form which is linked in the pinned comments. Do check that out. I'll keep updating on this webinar in my free weekly newsletter. So make sure to subscribe to the newsletter to stay updated. Link is again in the pinned comments. Next, let's look at the second way of investing in the US stock markets, which is opening a demat account with a US broker directly. There are a lot of investing options. Big ones such as Interactive Brokers, Charles Schwab, Fidelity. Smaller niche ones catering to specific trading styles are Maxim, TradeStation, CapTrader, First Trade. There are many other options. But in this video, we'll look at Interactive Brokers, which is a US broker offering investing access to 150 plus global markets. Investors can also access options, futures, bonds, and margin trading directly through Interactive Brokers. To open the account, even Interactive Brokers now has the option of CKYC, and you just need to upload your address proof. So this is a little less seamless than INDMoney because of a few manual steps. Like INDMoney, even Interactive doesn't charge opening, withdrawal, or platform fees. Let's look at the ways to transfer money to Interactive Brokers app. There are multiple options to fund your account through wire transfers, linking to Interactive Brokers, setting Interactive Brokers as the payee. But unfortunately, for all options, you need to have US bank accounts, except for wire transfers. So, wire transfers is the only remittance option available for us to invest from India. However, wire transfer is expensive and has more steps involved. You will have to initiate wire transfer from your bank after adding the beneficiary details mentioned on the Interactive Brokers site. Wire transfer requires a few more steps to set up. The bank will add its remittance charge of 1180 rupees including 18% GST. 45 rupees is charged as GST on conversion. So the total charge by the bank for remittance is 1225 rupees. The remittance takes 1 to 2 days to reflect on your Interactive Brokers platform. Now, let's invest 10,000 rupees again through the Interactive Broker platform. The exchange rate offered to me by the bank is 90.3. That means I'll be investing $110.74. I'm buying 0.45 shares of QQQM, which is priced at $244.23. But the platform is charging me $1.1 additional, which is the brokerage. So let's see how Interactive charges for brokerage fees. Fixed charge is $0.005. Minimum charge per order is $1, but the cap is 1% of the transaction value. There are also regulatory, exchange, and clearing fees which are charged above this. So the total cost is $1 plus 0.005 of fixed charge. The total charges after adding GST, remittance, and brokerage comes to 1325 rupees. That comes to 13.3% of the invested amount of 10,000 rupees. That's huge compared to INDMoney's 4%. So unless you're investing higher amounts in lump sum, these charges will eat into your returns. Because of higher cost of wire charges, which is a fixed fee, the cost as a percentage of invested amount increases significantly. Like we saw earlier, even in the case of interactive brokers, it will be more cost effective to do lump sum investments of 50,000 and above instead of incurring such high costs on small monthly SIPs. At 50,000, the charges for interactive brokers would come down to 3.5% of invested amount. At higher invested amounts, the cost as a percentage would come down even further. Of course, since Interactive Brokers is a US broker, it would by default be regulated by SEC and FINRA, and investors would be covered by SIPC, which is the insurance of 500,000 US dollars. To summarize, let's look at the key differences between investing through Indian apps such as INDMoney or through US broker apps such as Interactive Brokers. INDMoney is very seamless to invest through. On the other hand, Interactive is also seamless, but it only enables wire transfer, which increases the steps and time taken to invest. INDMoney only offers investing in US stocks and ETFs, while Interactive offers investing in 150 plus global markets and in all asset types. INDMoney is catering to Indian retail investors wanting global exposure in their portfolio, while Interactive allows trading and access to global markets, which makes it more suitable for active traders or institutional investors. We saw charges in detail. Because of higher remittance charges for wire transfers, US broking apps such as Interactive become costly for retail investors. But Interactive has global credibility and trust, while INDMoney is a relatively new Indian player. However, both are SIPC covered. Though INDMoney is covered via its partners and not directly because it operates as a fintech enabling US investments. In my view, both these apps give you a lot of flexibility to invest directly in the US markets. So it depends on your investment amount, which markets you want to invest in, and which instruments you want to invest in. But you need to be mindful of the tax implications and disclosures if you invest internationally from India. I've made a detailed video on it. Do check that out. Also, do you want to know the current US stock market valuations before investing? Then do check out this video to understand it in detail. Okay, that brings us to the end. If this video simplified international investing for you, then share it with fellow investors who have been planning to invest abroad. And do subscribe to the channel so that we can keep mastering global and Indian investing together. If you want to go deeper into top US tech ETFs, do join my upcoming live webinar. Link is in the pinned comments. Thank you for watching. See you in the next one.